Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Hey guys, and welcome back to Fintech Daydreaming. This is the first episode of season 4. I am Paul Krogdahl, your host for this show. And as always, I've got with me my fantastic good friend and partner in Fintech, Ville Sointu. And today we've got a fantastically great guest. I am so pleased to have with us Richard Turrin. And we're going to be talking about a subject which is really interesting, I think very topical at the moment, central bank digital currencies. But let's kick off. I mean, Richard, welcome to the show. It's fantastic to have you here with us today. For those who don't know you, and I'm assuming it's very few, particularly in the circles that we move around in, why don't you give a quick intro on who is Richard Turrin and how did you end up in China?
Sure, that's a great question, Paul. Ville, thank you so much for having me on the podcast. I'm delighted to be here. Who am I for all those people who don't know me? And I'm sure that's a lot who are going to be listening in. I am the author of 2 books now, and the first of them is Cashless, China's Digital Currency Revolution, which is the first book out on China's central bank digital currency. And the other book that was written about 2 years ago, 3 now, 3? Yeah, I think so, is Innovation Lab Excellence. And it's a manual for how to run innovation programs in companies. So basically they go together because all of my career, I've been an innovator within banks and then with you at IBM for a little short of 5 years. And my life has been spent around bringing innovation into the financial area. I was a trader for 18 years, and I worked not just buy and sell. I worked basically with computers, coders, and mathematics. I'm a mathematician in another life, and basically trying to understand how we can digitize and make finance into a digital product. And that's really what central bank digital currencies are all about. So why did I write this book and how did I get to China? Very simple. There was the great financial crash, which made structured products, the area that I worked in for the 18 years, disappear. It stopped, it ceased to exist as we know it. So I came to China and I became an MBA school professor at the Hult International School of Business, which was wonderful, loved it. And eventually here in Shanghai, got picked up to go to work for IBM, which is where we know people in common and how we have some connectivity. So I watched, when I got here in China, it was 2010, and I watched China go cashless. There was no WeChat Pay and Alipay. Technically, there was Alipay. It was on your computer only. It wasn't a mobile payment platform in 2010. But I watched the transformation from a place where I would go to the bank and get bricks of money to pay security deposits and large cash outlays. I'd have to use big bricks of money. I went from that to never carrying any money, and I live the cashless life here in China, and I've been here for 10 years. And that's what moved me to write the book Cashless.
I think I can see an awful lot of similarities between China and what's happening here in the Nordics. Obviously, the Nordics is slightly behind some of the elements of China's cashless society. But Ville, I mean, as a banker working in one of the large banks, you're seeing this as well, right?
Yeah, and I would actually disagree a little bit. I think the Chinese market is not moving at all like the Nordics. I mean, Nordics really has always been driven by banks in terms of digitalization of cash. So even though we are in a situation where most of the Nordic countries, particularly Sweden, is mostly cashless now, it's only based on bank products like card payments and debit cards, credit cards, and such. Whereas in China, it was clear that the kind of the breakthrough in mobile payments in particular was driven by these kind of technology companies, e-commerce companies like WeChat and Alipay. And I think that the Chinese model resembles more the mobile money market in a lot of the emerging markets, where the mobile operators took the role of the bank by replacing cash with digital. Now in China, this of course is in a completely other scale, kind of next level, because they've completely removed the cash element, because in emerging markets, even though they use the mobile money solutions, they still rely a lot on cash for the last mile of the payment equation. But yeah, I think as far as the model goes, I think it couldn't be more different from the way the Nordics has kind of grown. It's a whole other question, however, how this will evolve in the future. I think we will see more different kinds of players from different industry segments entering the payments and finance space, even here in the Nordics. And I think there will be kind of convergence of these models as we move forward.
No, absolutely. And you're absolutely correct. There's been different motivators and different perspectives on the growth around a cashless society to some degree between China and the Nordics. Like you said, the Nordics has been driven predominantly by the banks. I'm wondering, Richard, what have you seen as being the core motivators and reasons for China being so aggressively moving towards central bank digital currencies in a world of cashless as they have? I mean, is it driven by the regulators, by the banks, by the IT companies, or by the government themselves? I mean, there's a lot of discussions around this and Big Brother watching, etc., right?
Well, okay, so let's handle the motivators first, and then we'll get into Big Brother, I think, in the next question, because they're somewhat distinct. Yeah. So Ville nailed it. It is 100% true that the motivator for the launch of mobile payment in China was different than that compared to the Nordic Scandinavia, the Swedish experience. Sweden is the country that we most study for that. So we have to go back in time to 2014. And in 2014, there was a breakthrough moment in China. And that was when the first private banks were licensed. And the original batch of private banking licenses went to big tech. And the four of the big companies were Alibaba, which eventually spun off and it spun the banking and other payment platform off into Alipay and Ant Group. And then, of course, it was Tencent, which was WeChat, which, of course, had another banking group. And then there were two more, Baidu, the search engine, which is the rough equivalent of Google. So, and then one that people don't know so much is Suning, which is China's largest electronics chain. So 2014, the banking regulator and the People's Bank of China understand and realize that digital is the future. You have 1.4 billion people. There is no way you can build enough brick and mortar banks to service people in rural communities. So China had a very large unbanked population. So what you had was the Western equivalents of a banking license for Facebook, a banking license for Google, a banking license for Amazon, and the fourth one with the electronics store. In Europe, for the European market, it would be German MediaMarkt. I think they're probably the biggest of the European chains. But the point is, it evolved from a rather different basis. Now, that's the start. That's mobile payment. Now, mobile payment is what I like to call version 1.0 of digital payment in China. And now we're advancing into what is version 2.0, which is central bank digital currency. In 2014, when these private banking licenses were issued, the People's Bank of China started to research what it could do with essentially the technology for Bitcoin. Yeah. And cryptocurrency. They saw cryptocurrency, and while it was mostly ignored in the West as being not for serious bankers, not for serious people, the PBOC looked at it and said, hey, there's something here. And they started their research into a central bank digital currency back in 2014. Clearly, the tremendous success of Alipay and WeChat Pay in transforming China to a cashless society helped push the version 2.0 payment which is central bank digital currency, by the PBOC. If mobile payment was a failure, you wouldn't be in this CBDC launch mode right now for it in China. So it was the realization that digital payment was tremendously helpful to the unbanked, to boosting small businesses, to boosting GDP within China, and that it provided a real service that banks in China could not be expected to provide, both because they were state banks and slow, that's bad on their side, but also because banks simply can't reach 1.4 billion people without a tremendous digital presence, and digital companies were the best suited to deliver that.
Yeah. No, it's interesting. I mean, you mentioned off the Bitcoin and cryptocurrencies. We've already covered that, and in previous episodes, Ville and I have discussed Bitcoin and cryptocurrency at length, right? But it's interesting. I get involved in an awful lot of discussions these days with people who are seeing central bank digital currencies, cryptocurrencies as synonymous. And you get involved in this sort of ongoing heated debate that central bank digital currencies is still public money. It's an equivalent of cash, whereas cryptocurrencies are assets, something floating down there. And they basically end up in this analogy of, yes, but it's all blockchain, and it's all blockchain, and it's all crypto, and it's all assets. And it ends up almost a religious discussion. I mean, from your perspective, Richard, how would you define central bank digital currencies in its relationship to cash, in its relationship to crypto assets, etc.? Just to paint that sort of picture for our listeners.
Okay. Yeah. Okay. So let's make sure that everybody's on the same page here. And I really love the way that you call it a religious discussion, because I don't even go, I try not even to go there. It's so scary for me. Ready? Really simple. Central bank digital currency. The most important words are central bank and then digital currency. So it is a digital currency. That's true. It uses some of the technology that was developed from cryptocurrencies, although not always blockchain. We'll get to that later, okay? Central bank, meaning that it is central bank backed money. This is money. For those of you who can see, that is a 100 RMB banknote. That is issued by the People's Bank of China, right? We're all familiar with this, regardless of whose picture is on your banknote. Central bank digital currencies are digital versions of this note, okay? So, central bank digital currency, banked by the central bank, not a cryptocurrency. Okay, cryptocurrency backed by faith. It is a religious belief in what the value of a cryptocurrency may be. And if you love cryptocurrencies, great. If you hate them, great. I'm agnostic. And let me say this. Let me say something. I'm an old banker. I spent my entire life with normal money, and it was a very hard transition for me to believe in cryptocurrencies. And I do not perhaps believe in the religion, so to speak. However, I want to say this. Even if you hate cryptocurrency, okay, you're listening to me right now and you really, really don't like cryptocurrency, that's fine. But you must give credit to them for designing the fundamental systems that are being used now by central banks. Were it not for the crypto dreamers, were it not for those innovators, we would not be looking at central bank digital currencies today. So give credit where it's due, even if you dislike cryptocurrency. Ready? One more last caveat to this. If you love cryptocurrency and hate everything about fiat currencies, give some credit to the central banks for at least trying to tokenize money and at least trying to make the flow of cash better and easier for most people. Even if, I get it, Bitcoin fans, I know some of you really loathe anything that has a central bank attached to it. I get that. But they're trying, and they're trying to make the experience we have with cash a better one. So crypto, we owe a debt to you. But remember, central bank digital currency and crypto are different worlds, forever apart, but somehow connected by some of the same technology.
It's interesting. We've said this in the past as well, Ville, that a lot of innovative technology actually is born out of, can we say, shady activities, right? We look at Spotify, the sharing of media, etc. It's always some sort of black market push that actually drives the innovation, exactly the same as, you know, cryptocurrencies trying to get away from central governance, etc. Which leads me to another question, Richard. A lot of discussions that I get involved in again, and I actually had a very interesting, explosive discussion on LinkedIn a couple of weeks ago, is around the fear of central bank digital currencies putting too much control and power into the central banks in not only seeing all of your transactions, but also having theoretically the ability to veto any transactions, deciding where you can and cannot spend your money. Unlike with cash, where once you've got cash in your hand, no one can actually see, trace, or stop anything you're doing. Is this a direction we should be fearful of, do you think? Or is this the rumor mill getting carried away?
It's the rumor mill getting carried away, and let me explain to you why. I understand that cash is, for lack of a better expression, the gold standard for privacy. I get that. Here's the reality. Most of us don't use a lot of cash already. So you are living in what I call the worst of all worlds. You have no privacy in your digital payment life, meaning that every time you swipe a credit card, your data goes to how many data brokers, how many people will sell that data, from the originating bank who has their name on your credit card to the receiving bank of the merchant who will sell that data, to all the data brokers and people like credit rating agencies in between, who are all part of this chain of data. So you have very little privacy in the current digital world. Privacy bad. Now, wait for it. Here's the weird thing that really kills me. You're paying merchant commissions for credit card use are what? Anywhere between 3-5%. If you go to the Western fintechs like Square or PayPal, you're paying 5% plus. So you have no privacy, and you're paying somewhere between 3 and 5% for the privilege. You live right now in the worst world possible for payment, with the exception of some, quote, limited free payment rails. But even those, quote, free payment rails are all based on credit cards, meaning you're still being tracked.
Yeah.
So central bank digital currencies offer the following. They offer free cash transfer. That's the mecca. That's what we're looking for. Free cash transfer. And they're going to likely offer this. And I say likely. China's is offering this, and we have to see what Sweden, what the ECB builds. Every central bank digital currency is custom made. We have to examine exactly what their privacy specs are. But China's will offer the following: payment without your data going to these various data brokers or third parties who will use it. That's the dream. Now you say, the question is this: will the government cut off your payment? Ready? The government does not need a digital currency to shut down your bank accounts right now. Ask anybody in the United States who is being investigated for severe tax fraud, who finds that their bank accounts are cut off. So in a way, for those severe cases where you're a real big-time tax cheat, yeah, they're going to cut off your central bank digital currency the same way they're going to cut off your credit cards and your accounts right now. There was a great movie. What's this movie? You may have seen it. It's called Maggie's Game.
Yeah.
And there's this wonderful scene where she's trying to make a flea out of the country, and she goes to use her credit cards, and she's got a pile of them. She's a very wealthy person from running illegal gambling games, and none of her money works. None of her digital money works. And, you know, that's the reality. So this concept that the Chinese government is going to shut you down and or monitor every one of your payments just doesn't make sense. You got 1.4 billion people. Even with the biggest of big data, that's not going to happen. And we have digital payment here in China today through WeChat and Alipay. It is known that the People's Bank of China has access to WeChat and Alipay payment streams. And there are very few cases where the government shuts people down, except, of course, in the most extreme examples of gross tax fraud or something really horrible. So, yeah, sorry, guys. Reality is you don't need a central bank digital currency to have all your credit cards be shut down, and that's reality.
It is indeed.
Yeah.
Ville, it sort of lends itself towards your focus around digital identity, right?
It does. But before we actually get into the digital identity part of this, which is a big part as well, I think the previous answer by Richard actually leads it quite nicely into one of the biggest topics that we've discussed even on our podcast a couple of times already, which is the why question, the value proposition question of CBDCs versus the existing system. And of course, the answer to this question is different in China than it is, for example, here in the Nordic countries. But you mentioned, Richard, a couple of things already there. So the aim of having free cash transfer, so price point could be a value proposition, yes. However, even if you pay with a card today, as an individual at the merchant, you don't see any of those fees. The merchants are the ones who are paying those fees. And of course, you can see that in the price of the product as well, ultimately. Yeah. But for all intents and purposes.
You pay that. Excuse me. Let's make this clear. You were right in saying that the merchant pays that, and then you quietly said, oh, well, you put that in the fee. No, you pay those fees.
Yeah.
So that 5% is built into the retailer's price and everything. It is a tax on everyone in the planet that Visa, MasterCard, and banks put on all those that use any form of credit card, what I call payment rail.
Yeah. And to continue on that point, and I guess we could go on forever with this, is that even though you would introduce another payment method, which would be a central bank-backed, free or cheaper at least way of paying, you would still probably need these more expensive methods because the acceptance is widespread already. Kind of getting rid of that kind of momentous infrastructure that's already in place is a big task. So even if you build parallel rails, acceptance rails at the merchant side, it would take a very long time to replace any existing infrastructure. And that would mean that there would be a time period where the cost would actually be higher overall than it is right now. But again, I think this adoption issue is one. Now, let me bring on the other thing that you mentioned.
Excuse me. This is a great discussion, and I couldn't disagree with you more.
Okay, good.
Okay, and that's, look, guys, this is where it gets fun for all of our listeners.
Yes.
You said two things: that it would cost a lot and it would take a long time to replace these rails. No, it didn't. China showed with Alipay and WeChat Pay that an entire country of 1.4 billion, 90 some odd percent acceptance, of WeChat and Alipay, and it happened within 3 or so years. 3 or 4, I mean, literally these launched in 2014, and by 2017, you were looking at trillions of dollars of payment. Okay, so the concept that a central bank digital currency, costs a lot, is not necessarily accurate. It is an infrastructure project on the part of the central bank. It costs. Yes, absolutely. There's no doubt about it that the central bank has to build what I would call a road or a bridge for money. And that's not entirely a new role, because central banks all have real-time gross settlement systems that they run and maintain. All right. So that's part of what they do already. They just don't do it on the retail side. All right. So the concept that it costs a lot, no, that once that central bank digital currency is turned on, the rails are open to everyone. Every citizen in whatever country for a retail-based central bank digital currency has access to free money. And why is this free usage of money? And why is this so critical? Number one use. Right now, the systems that you talk about, which work, I'm not knocking the existing credit card banking system, it works. I'm not debating that. But it demands that you and your money must use a third party for the transference of money. Now, whether that third party is free or whether it's 2 or 3% or 4%, whatever the fees are, that's another argument. But it demands that you use a third party. What central bank digital currency, the fundamental thing that the Bitcoin guys got right, is that they believe that the digital transfer of money from person to person should not require a third party. And that is exactly the capability. So you say, why? Yes, there's a real need for the same way I send you an email, I should be able to transfer money from me to another person, and it should be free and clear of third-party organizations who control the flow of my money. Now, that doesn't mean I don't have KYC, know your customer, doesn't mean I don't have AML. It does not, yes, I need a digital identity, but this is where this is an unpreventable evolution of currency. So cutting out the third parties, giving me the digital freedom to send money, that's huge. We'll talk later about the unbanked. We'll talk later maybe about financial inclusion as another big gain for central bank digital currencies. But cutting out the third parties is everything. And that is fundamental. I have it in China. I don't have central bank digital currency, but I have what I call hypermobility of money. Yes, I agree. I need WeChat and Alipay. They're third parties. I grant that. But what I do have is the ability to immediately send cash where I want, anywhere anytime I choose. It is a miracle, and it is you will soon hear it be called a human right.
Okay, let me just give one point on all of those things, and then we can move on to the next topic,
Great.
which is that ultimately what we're talking about here is the kind of cheaper way to send money across, and I agree to that. Cutting off third parties, cutting off private entities with their own kind of incentives to have fees on top of fees. I mean, that's a valuable cause to do. Of course, there's going to be a lot of complications on the way there, but I think the key question here is that how do you build the value proposition and acceptance in an effective way that actually doesn't kind of completely disappear because these things are already solved, albeit more expensively? Because for the customers here in the Nordics, they can already send money across instantly without any hassle. So again, these value propositions already exist. How do you articulate that this is actually on a kind of basic level, fundamental infrastructure level, cheaper and more efficient on things that cannot be seen by the usual users of these systems? And that's why we, for example, had some attempts to do similar things here in the Nordics as well already in the 90s, and they didn't really kind of do anything because people didn't see the value of those things. But again, I digress. I think we should move on to the next question.
Well, look, I'll hand you this much. And look, I think it's a great question, and I think it's really critical. When you talk about the Nordics, where you already have free cash transfer, the value proposition, and provided that it is free, and I don't know what categories are or not, I don't know where the charges are, if any, for Sweden, Finland, or any place else. I just don't know, all right? But China already has two wonderful free payment systems, Alipay and WeChat Pay. Now, central bank digital currency, you say, well, where does that fit? You've already got free payment in China. And that's true, you do. What central bank digital currency will allow is the further digitization of cash transfer. So you're limited right now, and you see a zero-sum proposition. You say, well, cash transfer is free. All the cash that is being transferred is all there is. The pie is this big, all right? And my argument to you is that entire new payment streams are going to go onto central bank digital currency. It's already happening in China. If you look at JD.com, one of the online retailers, they are experimenting with central bank digital currencies. They started to pay employees in central bank digital currency because they wanted to see how it would work. So if you look at China today, big companies don't pay their employees with Alipay or WeChat Pay. They pay through normal fiat bank transfers, electronic bank transfer. Well, hold on. Do you need that? Right now, think about it. I've got a cycle where money goes from my employer paid to my fiat bank account. Then I take it out of a fiat bank account and I spend all my bills. Everything I pay for in China is paid through Alipay or WeChat through digital. I have to go around that circle. Why don't I just get paid in digital? It's a lot easier for most people. So, and again, this is a new digital payment stream. So when you say, well, what's the benefit? I get it. You've already got in Scandinavian countries, great payment. What you don't have is full digitization of the payment stream, and it's not zero sum. This is how we make a digital society. And that's what China really gets. China has almost 40% of its GDP connected to digital. Okay, United States, 9%, UK, 7.7. How did China get to 40? It got to 40 by going cashless, in part by making goods and services thoroughly available through digital payment and digital platforms. It is part of a digital society. So I don't buy the argument, and I'm being tough here, but I'm not buying the argument that it's good enough the way it is. It doesn't bring us anything new. Not true, and demonstrably not true if you look at the China experience. I'm tough on this, I know, but I'm a believer, sorry.
No, and I mean, at the end of the day, we all know that innovation happens, change is constant. So we're going to see a continued journey on this, whatever the case is, both in the Nordics, in China, globally. Another discussion that I get involved in quite often as well, Richard, is around the growth of central bank digital currencies and what that means in contrast to cash, the cash that we're used to, the paper notes, the coins, etc., in our pocket. A lot of people are seeing this as a one or the other, a black and white, that if we have central bank digital currencies, cash will disappear. I have a very strong view that we're not going to really see cash, at least for the foreseeable future, disappear. We're just going to see a sort of coexistence of the two, depending upon the use cases that we are following. Like you very much said, if you're paying digitally, you will use digital channels. There will still be cases sometimes where cash is more relevant. Do you think, both of you, do you think cash is dead?
I'll go first. No way. I write in my book Cashless, which is right here. Okay. So I write in here that I think that anybody who says we should eliminate cash is nuts. We are, and my rationale is as follows. We are still in what I call the infancy of our societal global digital transformation. We're just in the early days of it. Look, it's no doubt that we're going to have some kind of crash. We saw my favorite crash is the British BA reservation system when that crashed and all the airplanes across the globe were grounded, right? So, we're going to have that. And yeah, it's probably going to happen with one of our digital monetary systems. So far, it hasn't happened with Alipay or WeChat Pay in China. That's good. that's fundamentally positive. But we're still in these early days of digital, and I don't believe that we should eliminate cash. It should be there for us to use as an option, particularly for financial inclusion for the elderly, for those who are not able to afford a smartphone. Sure, there's lots of reasons why we need cash, and I do not believe, and by the way, China has no plan to eliminate cash. PBOC is very clear. We're keeping cash for the foreseeable future. No problem.
What about you, Ville?
Yeah, I think if the financial industry in general is kind of famous for anything, it's that the kind of decommissioning old products turns out to be extremely difficult, if not impossible. So of all of the kind of quote unquote products, even though I don't actually like to talk about products as much these days, but again, these solutions like cash, I mean, they will never go away. They will always have an audience. They will always have a demand. And I think cash is one of those things that is actually needed by the society, for nothing else, for situations where you might have widespread connectivity problems or blackouts or whatever kind of natural disasters that prevent the usage of online solutions. So I think cash needs to be there as kind of a fallback mechanism for commerce to happen in kind of face-to-face scenarios, at least. And to kind of look at any other products, I mean, most of the countries in the world, not here in the Nordics perhaps, but especially like in the US and the UK, are still using paper checks to do a lot of things. And that's a great example of a technology that just refuses to die because of even though better options are available. So yeah, cash will always have a role. Perhaps it is the kind of way these kind of demands of people who demand perfect anonymity on payments. Maybe cash is the way they will kind of get what they want. But as soon as they step into the world of digital, then they either have to go illegal or then they have to use legal methods. So I think that's the way it's going to go out.
Yeah, talking about checks, actually, I've got some shares in the US, and I got paid some dividend. I got sent a check by from the US, and I actually went to several banks here in Finland and said I'd like to pay this check in, and it was like, what? Worst thing was that it was for less than $1, right? They'd sent me a check for less than $1, and now I keep getting emails saying, you need to cash in your check. Well, one, I can't find a bank that will do it, and two, it's going to cost me more to cash it in than the value of the check. So I might as well just frame it and hang it on the wall. I really don't understand why we're still using checks these days, particularly when it comes to things like dividends on shares and those sort of things. But let me jump a little bit to the side here and talk about technology for a minute. We are a technology podcast, so I think we need to go into this area. Blockchain. I mean, we've spoken a lot about the fact that crypto has given us a lot of technology enablements that we need for central bank digital currency. Very often people will, again, make this connection between cryptocurrencies, blockchain, central bank digital currencies, put them all into one bucket. Now, the Chinese system for central bank digital currencies, Richard, is not using blockchain. Do you want to elaborate on that? I understand it might be for scalability reasons or something else, but from your perspective, why is blockchain not part of it?
Oh, sure. It's not from my perspective. It's according to the People's Bank of China. They've been very clear on this. So let's take a step back. For anybody listening, there is the assumption that if you're building a central bank digital currency, it will be on blockchain because cryptocurrencies are, by and large, also based on blockchain as the underlying technology. Blockchain is wonderful technology. I love it all day long. I'm an IBM guy. I used to work in an innovation team. We sold blockchain. The Hyperledger was, a big part of our practice. It was great stuff. However, China is really, really big. Remember that 1.4 billion people number. So let me tell you a story. Alipay has a great shopping day. It's called Singles Day, and it's 11/11. So November 1/1 and the 11th 1/1. So all ones, Singles Day. And that's sort of like Christmas, but bigger in China. Yeah. And it's the day where everybody goes and buys people presents. Even if you're not single, you buy your wife whatever a present, right? So the peak load on Alipay's systems during 11/11 or Singles Day were 500,000 transactions per second. I should say in excess of 500,000 transactions per second. So you got to remember that the People's Bank of China started with its CBDC already 7 years ago. So there was 7 years ago, and arguably there are none, maybe a few that are in trial now that can really handle true blockchain systems that can handle that kind of throughput. So let's just give everybody a concept of what 500,000 transactions per second means. When you look at Visa or MasterCard networks, which are designed for all those card swipes and taps, right? They, in the West, in Europe and the US, are somewhere between 50 and 70,000 transactions per second. So you have to add another zero there to get the kind of throughput required to handle peak load for transactions in China. It's really big. And when the networks get slammed, they have to be built to a standard. So right now, if you look at blockchain systems, the people will argue that Ethereum 2.0 might handle it. It'll handle 300, 400,000. Maybe it's not published. It doesn't exist yet. Maybe in a couple of years, if there's a country building a CBDC, they'll build it on Ethereum 2.0. But right now it's not around, and it wasn't around years ago when China was building. So not blockchain. The exact words from the People's Bank of China is that they are agnostic to technology. They just need the technology to do the job. So what they did was they take all of the cryptographic, they take all the cryptographic control, they take the concept of UTXO wallets, private keys, public keys, they tokenize the RMB. They take a lot of pieces of what you would assume is a blockchain solution, but they actually don't use actual blockchain underlying it.
Yeah.
So ironically, you could actually say that they are kind of, instead of decentralizing this, they're actually centralizing this kind of solution more, because with the existing infrastructure, it's basically retail banks trying to figure out how to work with each other. But now we're kind of pulling it back to the central bank and kind of creating an automatic interoperability layer at the central bank level.
Well, yes and no, because remember, the answer is it is highly centralized at the People's Bank of China level. They built the bridge. They build the underlying technology. As far as you as the user go, it's got this wrinkle. It's called a two-tier CBDC, meaning that as far as a client is concerned, they are not, you and your CBDC will be used through the wallet provided to you by your commercial bank. Okay, so underlying it all is this PBOC system. But as far as you're concerned as a client, it's the bank that you see. Your wallet is directly attached to your bank account. And for those who do not have large sums of money, and this is where the financial inclusion comes in, you can use China's central bank digital currency without a bank account. But then there's a limit. If you get to too many thousand, it's not publicized yet, but if you get above so many thousands of dollars, you have to have a bank account. But for many rural Chinese, they have very small balances. They can use the central bank digital currency without even having a bank account.
And since we already mentioned the digital identity question before, and we kind of promised to get back to it, I think this is the key. So once you have those wallets in the hands of kind of citizens, and then they have central bank digital currency and some level of KYC done there, then how about you also put your national ID card, digital ID card in that same wallet? Then we're starting to talk about really interesting equations of new types of kind of business models and new type of applications, kind of increasing the size of the pie, as you mentioned earlier as well, Richard. So again,
absolutely,
yeah. So the key really is combining identity with cash transfers.
I couldn't agree with you more. Look, for all the Bitcoin fans out there, KYC and AML are a reality. The concept that you're going to be able to pass money around the planet and have nobody know who it is and it's secret. No government in the planet is going to go for that.
No.
And, so the concept of decentralized currency networks where you are free to use them. You can decentralize the network, Bitcoin is, but increasingly on Bitcoin, KYC and AML. And we just saw yesterday, it was in the news, that Binance now has to limit the withdrawals for all of its clients who are not adequate, do not have adequate level of KYC. I think they limited it to 0.06 of, one Bitcoin. It was, so yeah, that's just reality. If you're going to be sending money, regardless of whose money it is, Bitcoin, stablecoin, whatever, KYC is the reality. Now, that's important. Why? Because the gap between Bitcoins or cryptocurrency and CBDC is closing. Years ago, people said, well, I have Bitcoin, I'm free. No, you're not anymore. And I know people are maybe sad about that. I get it, but that's just the reality we live in.
Guys, unfortunately, time is running from us. It's fantastic to have these sort of discussions. We could have them forever. As a last question to you, Richard, if you could, or even dare to, put on some future vision goggles, where do you think we're going to be with central bank digital currencies in 5 to 10 years' time?
Sure, really simple. It's easy. Folks, here's my, for those of you who are watching, you can look at my WeChat wallet here. My WeChat wallet currently has the ability to pull down a little menu, and I can choose between several bank accounts to pay from. I can pay from one account, I can pay from another, and eventually it'll have a fourth menu that'll say, do you want to pay with central bank digital currency in your wallet? That's here in China. In the West, in 10 years' time, you're going to have the same thing. You're going to have a digital wallet, and you'll be able to pick, do I want to pay with Visa? Do I want to pay with central bank digital currency? Do I want to pay with stablecoin? You will pick the currency that you want to pay with depending on the use. So if you're buying airline tickets and Visa or American Express gives you points or something and you want to pay through that system, go ahead. If there's some reason why it's easier to transfer money using a stable coin because you're paying your cousin in Italy, my case, fine. You use the stable coin. You'll use and pick the money that you wish to use. And if it's Bitcoin, because you love Bitcoin, God bless you, have fun, pay with Bitcoin. Whatever it is that you'll have more selection on payment than you do now. And that will fundamentally be a good thing for people. And it will drive the cost of payment down to zero. Yeah. You can't charge merchant fees of 4% when somebody can say, look, if you pay me with central bank digital currency, the cost of this product is 4% less. Which one do you think people are going to pick? So payment is going to zero, and it's going to be central bank digital currencies are going to make most of our lives much better. The fear that people have on them for them is by and large unfounded. So it's a good future. We should look forward to it.
I certainly am. I'm, always positive of the future. So absolutely, I agree, Richard. Now, thank you very much for joining us for this discussion. I, for one, really am positive about central bank digital currencies. I see a lot of benefits in it. Like with everything, it's always a double-edged sword, and criminals will use it to their advantage, and the rest of us will get penalized on behalf of the criminals in one way or another. That's always been the case. But it also motivates us to find ways of beating the criminals as we move forwards. Now, Richard, for those who are keen to follow this discussion, to get in touch with you, how can they find you? How can they reach out to you and continue the discussion with you?
Absolutely. For anybody who strongly agrees or strongly disagrees with anything I've said today, please reach out to me on LinkedIn or on Twitter. I'm active on both platforms every day. I post on LinkedIn almost every day, and it's almost always about China and central bank digital currency or tech in China, if that's of interest to you. And on Twitter, I've got every day I've got a whole pile of articles there. If you want to keep up with central bank digital currency, please feel free to connect. My book is available. Both books are available on Amazon in digital and hardcover and paperback, the analog versions as well. No audiobooks, sadly. No, I haven't been able to go audiobook, but absolutely a pleasure. So I have a joke, but I have a joke for you.
Oh, excellent. Ooh. A joke, please.
No, it's not really a joke. It's not really the joke of the day.
Okay.
But it's close. You ready? So yes. There are the two big lies that people always say. The two biggest lies in the world are being disproven by central bank digital currency. And here's why. The first lie is that we're the government and we're here to help you. Frankly, if the government builds a central bank digital currency, they are genuinely helping you. And the second lie that everybody has used for 100 years is the check is in the mail. Once central bank digital currencies come, there will be no check in the mail, guaranteed. So the two oldest lies are going to be made untrue or defunct because of central bank digital currencies.
Fantastic. Thank you very, very much, Richard. And thank you, all of our fantastic listeners, for coming back and joining us for the first episode of season 4 of Fintech Daydreaming. We've really enjoyed this. We've had a nice short summer break, and we're looking forward now to bringing to you a lot more fantastic guests and interesting subjects leading up to Christmas. If you've got a subject you would like us to cover, if you've got a proposition of a good guest to join Ville and myself here on Fintech Daydreaming, then let us know. Reach out to us on the normal channels. We're on Instagram, LinkedIn, Twitter, YouTube, and on our website, fintechdaydreaming.com. You can also email us on hello@fintechdaydreaming.com. As always, we're still trying to drive up visibility on YouTube, so we would really appreciate it if you wouldn't mind going to the YouTube channel, hitting the subscribe button, and maybe comment to 1 or 2 of our episodes that you've really enjoyed, so that we know what it is you want to hear more of. What is your passionate subjects when it comes to banking, technology, and fintech? We will be back, Ville and I, in 2 weeks' time for another fantastic episode. Really hope you're enjoying this as much as we are. This has been Fintech Daydreaming.
This is Fintech Daydreaming.